Bharti Airtel has a strong user base. The 2G users on its network are pretty much lower. The balance sheet is pretty much stable. Cash flows have been pretty much strong, and it also has a sufficient pan-India spectrum to launch 5G. But in case of Vodafone Idea, if you see, the number of 2G users on its network is very high. The balance sheet is weak. The cash flows have been weak. In fact, it has been negative, and the spectrum is also limited. It has spectrum only in 17 out of the 22 circles present in India. Now, what we have learned from the past generation changes and what it means when it comes to 5G launch. Firstly, we have seen in the past that operators with a stronger balance sheet has transitioned faster to a new generation, which means that from 2G to 3G, people with stronger balance sheet have transitioned faster. Similarly, from 3G to 4G. So if you see, a faster transition has also led to market share gains for telecom operators. Now, from 2013 to 2016, Bharti Airtel, Vodafone and Idea had seen market share gains because their balance sheet was stronger, so they were able to transition faster to 3G and 4G. From 2016, Jio started gaining market share because of leadership in 4G, and now with 5G launch, analysts are expecting that there could be further market share shifts among the 3 telecom operators that are currently present in the market.
All right, thank you so much for that, Soumit, for putting everything into context. What does this 5G launch mean for the telecom players and what it means for the nation as a whole as well? But let's move on and let's talk more about this with our experts today. We have Kunal Bothra as well as Shahina Mukaddam joining us. A very good morning to you, Kunal, as well as Shahina. Thank you so much for joining us on Buy Now Sell Now. And Shahina, coming first to you, a big ambitious 5G launch. October 1st is when the Prime Minister will be launching the 5G services. You have the players who've chalked out when they are going to launch this 5G. How much of a game changer rather it will be for these telecom players? We know that Reliance Jio as well as Bharti Airtel are in the top position to capitalize on this, isn't it?
Yes, absolutely. There are a couple of factors actually. 5G is not only will transform the way, the way we have mobile applications, improve the speed, but also even for the service providers, it is more cost efficient in terms of lower maintenance cost. We have lower power cost. So they themselves will be able to be more efficient in providing the services. Now, if we go on to the individual players here, I think, of course, Jio has an upper hand because the 700 megawatts does give it an upper hand. It has also the larger market share as we just discussed. I think it's 36% plus. So there, I think Vodafone is the weak player, and maybe the other 2 players will gain market share from Vodafone if they are not able to pull their act together. So I think to that extent, the strong will get stronger. I think also in terms of the pricing, I don't personally believe there will be too much of an aggressive pricing for 5G to start with, because I think the aim of both the leading players, as they have already actually set out, is that they are out to increase the to get their subscribers to switch on to 5G. So I don't think the pricing will be aggressive. I believe it may not result in increase in ARPUs immediately, as we've seen in the rest of the countries which have launched it recently. But I think it is going to be a game changer over the next 5 years. So I think Jio, if I were to place as the best position, both in terms of balance sheet, as your analyst has just enumerated, well-capitalized balance sheet, can invest further. I think is the best placed. Airtel, of course, is also similarly well placed, decent balance sheet. They have also raised funds. So I think these 2 players are well positioned.
Right, thank you. Kunal, coming to you now, we've just been speaking about how, the 5G launch is just around the corner. What telecom stock, according to you, is the best poised?
So good morning, everyone. I believe Bharti Airtel is also one of the key stocks, which I think is poised quite well. The charts for Bharti Airtel is still showing that the stock is somewhere at the lower end of a rising trend line, and it's been a huge trend line for Bharti Airtel because this trend has been going on since the last 4 years. For Bharti Airtel, from the 2017-18 lows, when the stock was at 200 and 250 odd levels, to now where the stock is almost at 750 plus mark for itself. So it's been a fantastic last 3-4 years for Bharti Airtel, and even at current levels of 750 approximately, I think it's looking quite attractive on the long-term chart. So for traders who have a longer-term vision, looking out for buying stocks from the telecom space for the next 2 years, 3 years plus, I think Bharti Airtel would still be a good buy.
Bharti Airtel still will be a good buy, and that's the take coming in from Kunal. And also Shahina is echoing similar views that both Jio and Airtel are all ready for 5G launch. They look better poised to capitalize on this. But on that note, we slip into a break on this edition of Buy Now Sell Now. But when we come back, we will be back with your queries, so don't go anywhere.
Powered by Housing.com.
Easy on trading. He does not want to trade as aggressively as he did, let's say, couple of
I
years
always
ago.
used to, I have felt that for the last 25 years कि क्या करो अभी छोड़ दो ट्रेडिंग में वो छुट्टी.
Once a trader, always a trader.
It's the daily grind that gets me going. Beating myself over the details. The tiny bits, the nuggets you tuck away. Somewhere you spot smoke and you look for the fire. At the end of the day, you don't want the froth. You want to skim the foam. And get your caffeine kick in a way that it hits that sweet spot. Yeah, just like a good cup of coffee. A real story with all the right elements that connects all the dots does not come in an instant. I'm Vikram Oza. Join me on ET Now.
Start your trading day with non-stop updates and uninterrupted trading ideas to power up your portfolio with unmatched experience and analysis from our market experts.
In the market, right here in ET Now.
Start trying to make a comeback. It's a smart start.
Sensex is up more than 400 points.
Management is now with us. Overvaluation case.
See that 17K.
Watch the opening show from 8 a.m. to 10 a.m. ET Now. Break free.
Now things are exactly as what you had shared with us. We are staring at India like never before.
Absolutely. And people are not realizing it. I wish every Indian felt that. But time is that नास्तिक है उसको आस्तिक मत बनाओ, समय बना देगा.
For an SIP investor, next 2-3 years, is there a probability and a possibility of a double-digit return?
And although difficult to predict, return will be more than 10 lakh.
sectors, in individual sectors.
What's the sense that you're getting on volume growth? Just clarify this entire case. What is it going to mean for the business? What else are you looking at?
This is clearly one of the biggest deals.
Here, ET now have been getting you bit by bit.
The rupee depreciation is only helping further than the seller of that commodity in India benefits.
Speculation is as old as the hill. We started off the correction with the scare of interest rates rising.
I don't think the sanctions go away within a couple of weeks. They will stay for some more time.
For anybody who has a 3 years time frame, I think next 6 months would give good entry points.
I think from a medium to long-term perspective, I think we should still be fine even from here.
It's not always about buy, sell or profit loss.
So after a gap down start, there is no buying.
It's about making you market ready with insights from the foremost market anchors.
Stocks open sharply. The Nifty Bank Index is down momentum. It's in fact coming to the market.
And the views from top-notch technical analysts. Join them talking business, markets and earnings every trading day from 8 a.m. to 4 p.m. only on ET Now.
Rakesh Jhunwala is a very quick decision maker. Some of our common friends tell me that you take a decision to invest millions in 10 minutes. You don't take hours, you take minutes. How does it work?
You got to catch the vital points. And second thing, remember I want analysis paralysis. You're investing in a future which is uncertain. You cannot predict it beyond a point.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and markets have been pretty choppy. We've seen a very volatile bout in the markets as well. But Shahina, coming to you, how can investors or retail investors protect their wealth with regards to when you're seeing what's happening with the markets, not only in India, across the globe, there is sharp volatility. So how can one protect their wealth?
Well, some of the outcomes of what is happening globally is the strengthening of the dollar and the weakness of the rupee. So that would be one area which one could look to, add stocks to your portfolio. Invest in over the next couple of months where this uncertainty is likely to continue. So taking that theme forward, I would go in for maybe some hotel stocks like Indian hotels, some IT stocks also, though there I think there is some bit of sentiment negative, but maybe something like an Infosys or TCS, or pharmaceutical stocks which earn in dollars as well as have domestic presence, new brand, new products like Cipla, Dr. Reddy's. These would be some of the stocks which I could look for that theme. Other theme, of course, would be some of the domestic strong brands and domestic oriented companies, banks also. So something like an ICICI Bank. You could look at some cement company. I know Ambuja Cement is a controversial stock to invest in as of now, but given the way the capital holding is, the shareholding is there for the company, I think that could be a safe bet if you're looking at a medium to longer term. So I think this uncertain period gives investors a time to reshuffle the portfolio, at least for the next 1 to 2 years, and look at stocks which may survive and do well in this turbulent times.
Right, so that's the take coming in from Shahina, what one must do to protect its wealth from wealth erosion, given the fact that we are seeing volatile moves in the markets. But let's move on and let's talk about queries, rather let's take queries. Remember that this is the show where we answer all your stock-related queries. So we are live on YouTube, Facebook as well as on Twitter. Do write in to us. Tell us about the stock that you want to ask a query on. Do mention the stock name in case you've already purchased the stock. So do mention the stock name, the buy price as well as the quantity, and also tell us the time horizon that you're looking to keep this holding. And also remember you can write in to us on the WhatsApp number that's flashing on the top of your screen. So let's get going with the queries that we have already. And this one is coming in from Geeta, and Geeta is wishing us Happy Navratri. Happy Navratri to you as well, Geeta. And she's writing to us from Dubai. She wanted a view from on Titan from Kunal. She's saying that she's a long-term investor, but she wants a view for about 12 to 18 months. Does it make any sense to stay invested in Titan or look for an investment in Titan right now, or some other alternative altogether, Kunal?
Well, I would suggest to wait out for investing in Titan on an immediate basis. Now, I understand that the stock has been doing exceptionally well in the last 3 months, recovered from the sub 2000 levels to now 2700 plus. I think that was the high the stock had made. But somewhere down the line, the indicators have not given a breakout signal for Titan, and I'm talking of it on the monthly charts for the stock price. This generally gives a sense that maybe the stock or the correction could be, some more correction could be due into the stock price. So if I look at the monthly charts, I would still suggest a wait out, possibly maybe at 2,250, 2,300. That could be a very good point where you can look to initiate a buy, specifically with a time frame of 12 months.
Right, let's move on to the next query then, and this one is coming in from Santi, and Gland Pharma is the counter that Santi wants a recommendation on. Is already holding the counter from 2,113 rupees per share, about 50 shares. Wants to know what's the reason for bearishness in the stock, and is it good to add right now on every decline, or look to shift to DVs or Laurus Laboratories altogether? The outlook that Santi is looking for is 1 to 2 years. What's your take on this one, Shahina? Do you think that makes sense to stay put with Gland Pharma or look to switch to DVs or Laurus?
I would recommend she exits from Gland Pharma. The company is facing problems because there are issues because they are largely dependent on some raw materials from China and their operations in China. So I would ask her to switch. And other than the two stocks you have recommended, I would prefer she switches to something like a Cipla or Dr. Reddy or even an Aurobindo. But I would advise her to switch.
Right, Kunal, coming to you now. Subrata Mukherjee has written to us and he's asking the future of Aarti Industries. He's asking whether he should buy now.
Well, I think Aarti Industries had done reasonably well from the June lows. If I'm not wrong, it recovered from the sub 700 levels to as much as 920.25. But now the stock has gone to a corrective phase back again. So if you're looking to buy, I think you can start buying into two tranches. One, maybe at current levels of 750 approximately for Aarti Industries, and the other, assuming the stock corrects and retests the previous low, which is the sub 700 mark. Those could be the 2 points where you can look to average and buy Aarti Industries.
Okay, this one is coming from Richa Shahina and given an option of about 3 stocks: BEL, KPIT Tech and Chola Finance. Are these good ones to buy for the longer term and for the long term at current price? Either one of them out of these 3, which one do you think makes the cut?
I would prefer the first two. I think both BEL as well as KPIT Tech both look good at current levels. So she can take a pick and, in fact, divide it into 2 stocks.
Right, Suresh is writing to us from Kochi. Shaina, this is for you. And he's holding 175 shares of Canfin Home and Adani Greens. He's asking which one he should hold for a few months, and he's asking for his opinion on both these stocks.
See, Canfin Homes actually has corrected a lot. So I think valuations also are in favor of Canfin Homes. Things are getting sorted out. So I would prefer a Canfin Homes. Adani Green, the valuation is just, out of whack. I can't understand that company. So I would just give it a pass.
All right, let's move on then. This one is coming from Manish, or rather Nino. And Nino wants an ideal price to exit from Surya Roshni, Kunal. He already has 100 shares, which he's purchased at 500 rupees per share. He's asking whether he should exit this one and look to invest in Borosil Renewables altogether. Or rather, he's already planning to do it. Should he do it?
So I think if you've already decided to shift to Borosil Renewables, then it could probably make a sense that you can look to buy and do the shifting right now. But then for Surya Roshni, I would believe that this may not be the best time to try and exit the stock, because after a rally, this is the third straight week where the stock is going through a mild correction, but then the averages have started to shape up quite positive. So typically when a stock gets into a rally, then a minor correction, and the averages starts to get into a breakout mode, that's when new trends starts to emerge for the stock price. So I would probably suggest maybe a wait for Surya Roshni, not to exit at current levels, but yes, Borosil Renewables is something which you can look to buy at current levels as well.
Right. Sujata is writing to us, and this question is especially for you, Kunal. Bought 900 shares of Motherson Sumi at 145. Shall I average it or exit, is what she's asking.
I would suggest to exit. I think the stock has not done anything much in the last 6 months of this big auto rally or auto anchor rally for itself. And this is this kind of stock which you should completely avoid. When a stock moves down, when at a point when the sector does exceptionally well, those are not the points and not the stocks which you should be looking to buy. This is a general mistake which traders as well as long-term investors do, because they assume that the stocks are available cheap and they are not moving in terms of how the sector has shaped up, and that's where they tend to underperform, and the underperformance continues for weeks and for months at a trot. So I would suggest an exit on Motherson Sumi, and if possible, you can look at buying and shifting towards the large cap names on the auto pack. Traditional large caps name M&M, Maruti could be the two better bets.
Okay, this one is for you, Shahina. This one's from Muttupalani, and 100 shares of Go Fashion purchased at 1,082 rupees per share. He wants to know whether it makes sense to buy some more of this counter for the next 2 to 3 years. Do you think the prospect is that bright for Go Fashion that one can remain invested for that longer period, and is it advisable to buy some more of this one right now?
Well, the overall market looks weak, but I think the stock looks pretty strong, both on fundamentals as well as technicals. So he can look at dips to buy. Maybe if he buys it at say closer to 1,250 should be a decent level to buy it at. But I'm positive on the overall medium term.
Right, Shaina, coming to you now. Srirang is writing to us from Nagpur. He's asking for a long-term investment. Can TCS be bought at this level or wait for further correction?
Well, you can buy. See, TCS is the most expensive as well as very well positioned. As you know, in IT. At the same time, the overall sentiment for IT is a little bit weak as of now. In terms of growth, there could be some bit of slowdown over the next maybe year or so. Maybe you can look at dips. I would prefer, because short term the charts are looking pretty bad for TCS. I would prefer if he buys it at slight bit of dips, maybe somewhere close to 2,850. That would be a very nice level if the market gives a correction. Otherwise, you start buying in small quantities, maybe 20% now, and keep adding over the next 4-5 months.
Okay, this next one that I have is coming from Ankur. And Kunal, this one is for you. 2,000 shares of Adani Wilmar, who is what he's purchased at an average price of around 530 rupees per share. He wants to know what should he do with this counter.
See, so far, the stock has done exceptionally well. Even in the short-term charts now, even if I talk about the last couple of months, the stock has been trading above the 50-day moving average, and that's been acting as a support. So ideally, in such scenarios, you can continue to hold on, but then I would suggest that have a trailing stop loss. Maybe a 50-day moving average on closing basis could be a trailing stop loss, because if the stock happens to break below this level convincingly, say for 1 or 2 days on a trot, that could probably mark a signal of a change of trend for Adani Wilmar. So far the going is good. You can continue to ride on, but then have a trailing stop loss.
Right. Stay with us. On that note, we slip into a very short break, but don't go anywhere. The query segment still continues, and you've also got the rapid fire left.
आग को फैलने से रोकना मुश्किल है।
Hello and welcome. You're watching Markets at Noon. Midway through the trading day, we help you catch all the trading action
and get the bigger picture of the equity markets.
We help you screen through all the clutter and get you research insights.
master the market sentiment during the most active trading hour of the day.
Get exceptional winning strategies from our technical analysts as well as expert views coming in from the market makers. Catch markets at noon every trading day only on ET Now.
See, Nikunj, you are a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
When you are India's most experienced market anchor, you don't just ask the right questions, you make statements.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
If the normalization in the world will happen, demand which in a sense got destroyed will automatically make a comeback.
When you believe in India's growth story, you will be known for your acumen.
For long-haul FII who looks at India as still a promised land for consumption and for a growth revival destination, that pretty much is in the game. This crisis has surprised, I would say delighted, and has given birth to a new cult culture, both locally and globally.
Nikunj Dalmia, only on ET Now. The voice that instills trust.
My experience, based on what I've done in the last 20 years, these are the times where you don't panic, and if you stay committed to your financial planning, you'll be rewarded. The bulls are saying, look, this is markets which are telling you that the future will be much brighter than what the past was.
The voice that commands respect.
You could remember that every bull market is higher than the last one.
The voice that is always ahead of the curve.
Maybe later this summer, I'll buy more gold and silver.
Domestic is already at 60% capacity and going towards 80%. But we need more growth in international.
The voice that does not falter.
How do you convert this crisis into an opportunity? We will become stronger. We will survive this storm. With each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
Catch India's most experienced market anchor, Nikunj Dalmia, only on ET Now.
Rakesh Junwala wants to go easy on trading. He does not want to trade as aggressively as he did, let's say, couple of years ago.
I have felt that for the last 25 years. कि क्या करो अभी छोड़ दो ट्रेडिंग में वो छुट्टी नहीं.
Once a trader, always a trader.
It's the daily grind that gets me going. Beating myself over the details.
Welcome back to ET Now's Buy Now, Sell Now. We continue with the queries segment going on. Kunal, this one's for you. Dinesh is writing to us from Bangalore. He's holding 500 shares of HUL at 2,610. He's asking whether it's a good time to exit now or wait for a few more days.
I would suggest to wait out for a few more weeks, possibly, because many of these FMCG stocks, rather the money is getting rotated towards the defensive names. So it's bound to be that most of these FMCG names can actually see some good upside for themselves and more of a continuation up move. You also have to look at it in this way, that most of the FMCG stocks like HUL, they are coming back to their all-time high levels, and potentially a breakout of an all-time high results into an additional rally of at least 5% further for the stock price. So I think in both the regards, I would suggest to hold on.
Okay, this one is coming from Manish Raju, and he is holding 150 shares of Lodha, that is a Macrotech Developers right now. 1,134 rupees per share is the buy price. He bought it in February this year. Now he's saying that he's making loss currently. Now, so should he look to hold, sell, or switch to any other stock in the defense name? And this one he's asking for a period of about 6 to 9 months. What should be the strategy, Kunal? Do you think that switch from realty to the defense space, which has already seen a massive rally?
So I think it could actually turn out to be a good switch. I understand that Lodha, Macrotech Developers, as well as most of the other real estate stocks, they have gone through a painful selling in the last few weeks and over the last few months. But then it always makes a lot of sense to correct your mistakes, at least in terms of the picking of the price trends, because defensive stocks, I believe, are in for a much bigger uptrend over the medium to long term. So yes, these stocks have rallied exceptionally high, but then if these stocks are available 15%, 20% or cheaper from their previous swing high levels, that could be a point where you can look to initiate a buy. BEL and HAL would be the two stocks specifically in that category which I would suggest.
Right. Kunal, this question is especially for you. Vivek is writing to us from Delhi. He's asking about ITC. Is it going to go into time-wise correction? And he's also asking for your advice for a price to average ITC.
So I think it depends on what price you've bought. Assuming if you've bought at levels which is sub 300 levels or maybe around 250 to 60 odd, then I think at 320, 325 could be a point where you can look to average ITC. My sense is that the stock has gone to a different league of an uptrend, at least this year. The kind of outperformance which you've seen for ITC, I think is something just extraordinary, something which you've not seen for the stock in the last 5-6 years, for the price history. I would believe that this trend would continue for the stock. 350 could be an immediate target, but then, as I said, 325 could be a point where you can look to average further.
All right. Sorry to keep you waiting, Shahina. A lot of short-term queries coming our way actually today, but let me take this one. This one is coming from Shobhana, and she's asking about AU Small Finance Bank and wants to know whether it's a good stock to buy fundamentally. What's your take on AU Small Finance Bank? Do you think this one stands out among the rest of the financial pack for a long-term investment?
See, basically, before I go to that, I want to revise one of my recommendations which I made earlier. That was on Go Fashion. I was looking through the numbers in the break, and what I realized is that I would advise that the investor books profits in this because of the pledges. The promoter has been increasingly, I noticed, creating pledges. If you see the June quarter, the pledges were as high as 16%, and the promoter holds 52-53% of equity. So it's a recent listing 1 year, and the financials are sometimes up, sometimes down in terms of there are no consistency in numbers. So I would revise my recommendation over there. As far as AU Finance goes, yes, today the stock is doing very well and the bank is decent, but I would prefer a federal bank over a AU Finance simply based on valuations. A federal bank is 1 time price to book, whereas AU is about, I think, 4-5 times price to book. So I would prefer a federal over AU.
Right, so that's your take coming in on AU Small Finance, where you prefer federal over AU. And for Go Fashion, you've recommended the viewer to go ahead and exit from the counter, isn't it? All right, so Muthu, I hope you've taken note of that recommendation coming in on Go Fashions. Adhiraj, you can take over.
Right, and Shaina, coming to you again. Sudeep is writing to us from Delhi. He's got Sharda Cropchem. He's asking that it fell from highs of 700 last month. He's asking what he should do with this stock, hold or sell.
Well, it looks pretty bearish as of now, but I think if you're taking a long-term view, short-term, he may, go through some pain. So he can average at much lower levels. But I think, China factor is something that is going to play out negatively for the shorter term because of raw materials and, of course, crude oil prices being higher than normal. But I think over a period of time, Sharda Cropchem looks like a decent bet.
All right. Let me take some other query that I have. I have a lot of them actually from Dubai today, from UAE rather. Let me put it that way. And this one is coming from Ravi Chandran, and he's writing to us from UAE. 900 shares of Burger King, right now known as Restaurants Brand Asia. He's purchased it at a price of around 125 rupees per share. Kunal, he's looking for a target of 175 rupees per share. Do you think that it makes sense for him to hold on to it? Is this target achievable? His time horizon is around 1 to 2 years.
See, I think it's achievable. The indicators, are coming back into a positive groove or a breakout for, Restaurants Asia. And I believe at current levels of 126, 127, the stock has also confirmed a breakout of its 200-day moving average, if I'm not wrong. So on both the attempts, it looks attractive. But the only catch is that, there are many other stocks as well from the, restaurant space or the hotel space, which are, looking quite attractive. And I think Devyani International is something which I would probably specifically suggest as a strong buy. Closer to 175 mark could be a good point where you can look to average. So you can hold both of these stocks. For Restaurants Brand Asia, I think 175 could be an achievable target. But then for that, the time span has to be more than 18 months plus.
Right. Kunal, this one's for you. Chirag Malhotra is writing to us from Delhi. He has Exide Industries and Trident, and he's asking, what stake on these stock performances for the future?
So my sense is that Exide has been one of the few disappointing stocks over the last so many years. The stock has not been able to lift off to any major kind of an uptrend. Now, these are the kind of stocks where you generally don't buy on momentum. You ideally wait out for a point where these stocks correct, come back to their major support points, not just the minor support points, and those could be good confident entry points for a stock like Exide. Now, for example, on the charts, say closer to 140 odd mark, 140, 135 band is a huge support for Exide. So a best way to try and chip into the stock or enter into the stock would be to try and buy it closer to 135 to 140 mark.
All right. Allow me to actually club a couple of questions on the tech space altogether. This one is coming in from Tejas Bansal. He's already purchased Infosys at a price of around 1,689 and Wipro at a price of around 697, 100 shares, and he wants a view for the next 5 years for these counters. And on the other hand, I also have one of our viewers, that is Mulai Vendan, who's writing to us from Tamil Nadu, and he wants to know whether it makes sense to buy Tech Mahindra and Wipro at current levels. So both of these queries heading towards you, Shaina. What's your take on Infosys and Wipro, where Tejas has already purchased these counters, makes sense to hold on for the next 5 years? And on the other end, you have Mulai Vendan, who's asking whether it makes sense to invest right now in Wipro and Tech Mahindra.
If you've invested, I think, in tech as of now, and the stocks that you mentioned, TCS, Infosys, great. You can keep adding, do an SIP in tech, because I think in the shorter term, there is some bit of negative sentiment. You can add some of the smaller stocks like maybe KPIT Tech. I think that looks good. So I would prefer that over Tech Mahindra, especially because of the exposure, if you look in terms of country-wise and the currency.
So just let me come in there then, Shahina. So would your advice be this advice on SIP would be for individual tech stocks, or as index as a whole would make sense?
No, I mean, I was talking of basically a SIP similar type in individual tech stocks, because this is I think the investors out here are more direct investors. I'm sure all of this, they may be having SIPs with mutual funds. So that, of course, is something that one can add to your portfolio. But I was talking more in terms of a similar type of strategy.
Right, Shaina, this is for you. Vinod Kumar is writing to us from Chennai. He's asking which mid-cap IT stock is the best for long-term 10 years period.
As I mentioned earlier, I would say KPIT looks good. Also, you can look at something like a Birla. I think Birla, in terms of the change in management, in terms of the growth, I think Birla stock definitely looks like it has got long-term potential. It is moving into the large cap billion-dollar type of space in terms of revenue. So I would look at these two in the smaller mid-cap type of stocks.
Right. This next query that I have is coming in from Vivek, and he's writing to us from Dubai. And Kunal, he wants to know about your view on Just Dial for the medium to long term. Do you think that Just Dial makes a cut to as an investment right now?
Not really. I would suggest to avoid the stock. If you have not bought, then I would suggest to avoid. I think I would suggest that it's best time to try and chip into two key sectors at current levels. One would be from the auto pack, and I think something like M&M is something which you can look to buy. And from the banking names, where I still believe that potentially, say, over the next 6 months to 12 months, banking stocks are not outperformed. So IndusInd Bank or IDFC First Bank could be preferred bets.
Right. Kunal, Shaina, both of you stay with us as we slip into a short break. But don't go anywhere. We get you the rapid fire right when we return.
आग को फैलने से रोकना मुश्किल है.
The tiny bits, the nuggets you tuck away. Somewhere you spot smoke and you look for the fire. At the end of the day, you don't want the froth. You want to skim the foam. And get your caffeine kick in a way that it hits that sweet spot. Yeah, just like a good cup of coffee. A real story with all the right elements that connects all the dots does not come in an instant. I'm Vikram Oza. Join me on ET Now.
Start your trading day with non-stop updates and uninterrupted trading ideas to power up your portfolio with unmatched experience and analysis from our market experts.
In the market, right here on ET Now.
Start trying to make a comeback. It's a smart start.
Sensex is up more than 400 points.
Management is now with us. Overvaluation case.
See that 17K.
Watch the opening show from 8 a.m. to 10 a.m. ET Now. Break free.
Now things are exactly as what you had shared with us. We are staring at India like never before.
Absolutely. And people are not realizing it. I wish every Indian felt that. But time is that, नास्तिक है उसको आस्तिक मत बनाओ, समय बना देगा.
For an SIP investor, next 2-3 years, is there a probability and a possibility of a double-digit return?
And although difficult to predict, return will be more than 10 lakh.
In individual sectors.
What's the sense that you're getting on volume growth? Just clarify this entire case. What is it going to mean for the business? What else are you looking at in the market?
This is clearly one of the biggest deals.
Here at ET Now, I've been getting you bit by bit.
The rupee depreciation is only helping further than the seller of that commodity in India benefits.
Speculation is as old as the hill. We started off the correction with the scare of interest rates rising.
I don't think the sanctions go away within a couple of weeks. They will stay for some more time.
For anybody who has a 3 years time frame, I think next 6 months would give good entry points.
I think from a medium to long-term perspective, I think we should still be fine even from here.
It's not always about buy, sell or profit loss.
So after a gap down start, there is no buying.
It's about making you market ready with insights from the foremost market anchors.
Stocks open sharply.
The Nifty
higher.
Bank Index is
Buying
down
momentum has in fact come into the market.
And the views from top-notch technical analysts. Join them talking business, markets and earnings every trading day from 8 a.m. to 4 p.m. only on BT Now.
Rakesh Jhunwala is a very quick decision maker. Some of our common friends tell me that you take a decision to invest millions in 10 minutes, you don't take hours, you take minutes. How does it work?
You got to catch the vital points. And second thing, remember I want analysis paralysis. You're investing in a future which is uncertain. You cannot predict it beyond a point.
Hello and welcome. You're watching Markets at Noon. Midway through the trading day, we help you catch all the trading action
and get the bigger picture of the equity markets.
We help you screen through all the clutter and get
Welcome back, and you're watching Buy Now, Sell Now. Surprise, surprise. We continue with the query segment. We still have our experts, Kunal Bothra and Shaina Mukaddam, with us. So let me get going and let me take as many queries as we can in the last final lap of the show. So this one is coming from Vincent Sundar, and festive greetings to all of us and to you too as well, Vincent. He's holding about 500 shares of Britannia at around 3,600 rupees per share, and it is about 4.5% of his portfolio currently. He's saying he's a long-term investor, but should he look to trim down his investment? Shaina, what should he do? 4.5% of his portfolio only consists of Britannia. Do you think that he should trim down his portfolio and try to diversify his holdings?
Well, Britannia looks good on all parameters, technical as well as fundamental as of now. Yeah, definitely if he wants to diversify, he can add ITC to his portfolio. I think both of them together would make a good mix. And if he wants to further diversify, he can add something like a Marico. But Britannia by itself looks good.
Manjunath is writing to us. He's asking about LIC, whether he should hold or sell LIC shares. Right now, returns on investment is minus 30% is what he's saying. Shaina, this one's for you.
It's a very difficult question. But I think it's going to be a laggard. So one can switch to, if you're looking for good returns and, beta from here on, maybe you can just switch, because LIC will track the way the market goes in terms of stock price also. Probably I would switch to some of the stocks I've already mentioned in terms of my preferred bets.
Okay, Kunal, coming to you, and this one is from Abhishek Mehta. He's asking good level to take position in Reliance Industries for the short term, that's 4 to 6 weeks, or should he wait for some more 60 to 70 point downside?
I think you should wait out for more downside, because 2350, a major support, has been broken by the stock, and typically it should now come back towards the previous major support, which is around 2250 mark. That's approximately around 70-75 points lower than current levels.
Right, Kunal, coming to you again. Sudeep is writing to us from Delhi. Which stock should he buy from the energy sector? He's asking between Adani Greens and NTPC.
Well, I think Adani Greens is more of a high beta stock, and NTPC is a typically very low beta name. Out of the two, I would prefer that you have a mix of both of these stocks, because cumulatively, when you try and have both of these kind of stocks, your beta for the portfolio on the energy side would actually be very moderate. So I think recommending both would be a better option rather than just selecting one.
All right, with that, let's quickly kickstart with the rapid fire, but let's take note of the markets where you have Nifty Bank that has slipped into the negative territory, 1.5% downtick coming in from the day's highest point. And remember, the Dow futures, the S&P futures, all of them have cracked actually from the day's highest point. So you can see that rub-off effect on our Indian markets as well. And as we speak, you can see the US futures on the bottom of your screen. Actually, it's not there right now. But nevertheless, we are off the day's highest point with Nifty Bank in the negative territory. So let me kickstart with the rapid fire. I have my producer queuing me non-stop. The first one coming in from Viral, and he wants to know about IEX. He's already purchased at 190 rupees per share. Should he hold or switch to Asian Paints or Cipla, Kunal?
I think yes, you should switch it to either of the two names. Cipla would be a better bet.
Right, how nice. Someone from my hometown is writing to us. Sanjay is writing to us from Dehradun, and he's asking whether it's a good day to buy Reliance today. Kunal?
20 to 50 could be a good level to buy Reliance Industries. Maybe not today, but then I think over the next couple of days, you might see the stock coming to that level.
All right, this one is coming from Tansen from Kochi. Is it good time to buy Canfin Home? What's your take on this one, Shaina?
Buy it at dips.
Right, Anurag from Delhi, Shaina, this one's to you. He's asking about Tanla Platforms. Outlook for the next 2 quarters. He's holding 140 units at 910 right now.
I would give a hold.
Right.
Okay, Mr. Bhatia has got Paytm at the IPO price. Should he switch to Sri Renuka to cover the loss, Kunal?
Well, I would not suggest that switch. Much better is that you shift towards quality, maybe an M&M or Industrial Bank.
SK Mishra is writing to us, Kunal. He's asking about Metropolis Healthcare Limited. He's asking any view on the same stock.
Well, in fact, it looks very attractive to me on the charts, and the recent recovery in the last 2 weeks suggests that the new trend could be in the offing. I would suggest a hold.
Okay, Soumik wants to know about Apcotex. Is it a good stock to buy for the long term, and at what levels, Shahina?
Apcotech, I would say that if he wants to buy, he should wait. Buy it at slight. Maybe he should buy it at close to 490 or 500.
Right. Chirag is writing to us from Delhi, Kunal. He's asking for advice on Trident and Tilak Nagar Industries Limited.
So Trident, I think, is is a stock which has gone through a sharp correction. Maybe closer to 25-30 rupees band could be a better point for Trident.
All right, and Mohit wants some best stocks to invest in for short-term gains this festive season, Kunal.
Well, I think we've given a lot of trading picks, so maybe you can look out for Dr. Reddy as a buy. Sun Pharma has been one of the picks which I've recommended. So you can continue to be bullish on these names.
All right, and with that, we come to the end of the rapid fire as well as the extended query segment. Thank you so much, Kunal, as well as Shaina, for joining us on the show, giving us your take on the telecom space, as well as resolving all the viewer queries and viewers. With that, we come to the end of this edition of Buy Now Sell Now. In case we've not answered your queries today, don't be disheartened. We'll be back tomorrow and we'll take your queries, as many as possible. 11 a.m. is the time. But with that, we're totally out of time on this edition of Buy Now Sell Now. Goodbye from Adaraj, me and the team that put the show together. Stay tuned for Markets at Noon.
आग को फैलने से रोकना मुश्किल है.
Research insights.
Master the market sentiment during the most active trading hour of the day.
Get exceptional winning strategies from our technical analysts as well as expert views coming in from the market makers. Catch Markets at Noon every trading day only on ET Now.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout the last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
When you are India's most experienced market anchor,